figured out on the dollar index. We've got your technical analysis. We've got the headlines today. I'll read them again for you guys, just so you know what I'm talking about in case you joined late, all right? Got three headlines for you, and the main event is the dollar. It's surging ahead because of that reduced risk appetite, all right? Dollar bulls marching ahead. We're seeing a demand because of that risk-off sentiment. Secondly, stocks are looking ahead to big earning data this week. We got Microsoft, we got Apple, etc. And the main event of the week will undoubtedly be NFP, but we also do have a really busy economic calendar. We'll be seeing the FOMC and the interest rate decision, all right? So yeah, Duplay Squid says, your chart looks clean, bro. Yeah. Clean price action, raw, no funny business, all right? We need to see what the chart is communicating to us. And I think it's pretty clear to see that we can see that, and as far as the dollar is concerned, we're projected to see some weakness, all right? Fundamentally speaking and technically speaking, all right? I'm seeing those comments right there, guys. Come on, guys. Come on. I've been getting that for the past 2 days, guys. Damn. All right, but let's get into the news, guys. Tuesday morning, and we've seen that the US dollar is advancing, straight out at the gate at the start of a week that's jam-packed with earnings data, a trio of central bank meetings that could potentially see the United States and the British Reserve banks start to open their door towards interest rate cuts, all right? Those are the clues that we're waiting for in as far as the Fed monetary policy statement is concerned after the FOMC, as well as the BOE will be deliberating on their interest rate decision this week. So it's going to be a week filled with opportunities in as far as the fundamentals and the economic data is concerned. Now, a look at the week ahead sees us assessing the main event of the week, which is undoubtedly going to be the U.S. jobs data for July, guys, all right? We're also going to be looking at closely watched surveys on U.S. and global manufacturing. That's in the form of Chicago PMI, as well as the manufacturing PMI as well. We're also going to be looking at Eurozone GDP. We're going to be looking at Eurozone inflation data. All of that is out due this week. Now, besides that, I think markets are still a bit jittery ahead, particularly of that big tech earnings data that we're expecting in the week, guys. We're in earnings season. Last week kicked off with one of the biggest tech stocks, Tesla, disappointing, giving us the lowest earnings in the past 5 years, which is what was the main catalyst towards that sell-off we saw, particularly in US stocks, all right? Now, tech earnings this week are going to be a bit of a concern for traders who are particularly bullish on NASDAQ or Dow Jones or the S&P 500. More than that, there was also concern over the Federal Reserve's next move, guys, which has the potential to either be the catalyst for the risk rally that we've been waiting for, or is it going to be a further delay before the inevitable happens? I mean, markets are all pricing in. Fully interest rate cut of about 25 basis points, or a quarter percentage point if you like, for September. So, and as far as the risk rally is concerned, it's going to happen. It's just about to what extent and when does it begin, and all of that is contingent on what Jerome Powell could say on Wednesday, all right? Quarter of the year this week, all right? Now, after the bad week that we had last week because of the disappointing earnings from Tesla, I think that the market is still fearful that if big tech names disappoint this week, it could drag down US stocks broadly across the board, all right? Because they make up about 40% in as far as their weight on these indexes, all right? So guys, can you please keep down? All right, now let's talk about what to expect from the Fed this week, guys. If you are not in the know, it is Fed week, guys. We've got some Fed speak this week in the form of the Federal Open Market Committee meeting, all right? Now, after a decent June inflation report, particularly reflecting that CPI we got for June, as well as the PCE that we got on Friday last week, I think that markets are kind of preempting that the Federal Reserve will be able to start laying down the groundwork for a September interest rate cut. That's at the end of that two-day policy meeting, which kicks off today and ends tomorrow, right? Which will culminate in the FOMC statement from Jerome Powell, which is what markets are waiting for, guys. So as it stands, it's pretty clear that markets are fully priced in for a 0.25% interest rate cut in September, all right? We're expecting 25 basis points or 0.25% to be cut off of the key lending rate, which is great, particularly for risk assets, for emerging markets, for emerging currencies. If that happens, we'll get a stronger rand, cheaper petrol, etc., etc. Some market participants are kind of alluding to a 12% probability that we could get a 50 basis points cut in September, guys, which would be astronomical. I think we'd see a large sell-off in dollar-based fixed income investments, particularly weighting the DXY. It would melt, all right? And we'd see risk assets react positively. Now, and as far as the interest rate decision for tomorrow is concerned, across the board, I think we're expecting the FOMC to hold interest rates steady. However, there is a 6% probability that we could get an interest rate cut tomorrow. Not impossible, but highly improbable, okay? I think Jerome Powell, as well as the rest of the Fed members, have made it pretty clear over the past several months that they're going to be data dependent. They're going to wait for full confirmation to see that inflationary pressures are sustainably making their way towards that 2% target that they have before they can start fiddling with the interest rate. So, and as far as PCE is concerned, which is the Fed's favorite measure of inflation, we're sitting at around 2.5% right now, if memory serves me correctly from Friday's figure, which is closer towards that 2% target that we have, all right? So I think that it's still a bit too early to let off, and as far as the tight monetary policy is concerned, all right, the high interest rate environment, it's a bit too early to pivot from that. However, I believe that we're one or two good CPI prints away from having full confidence that inflation will subside and that interest rates are sufficiently restrictive. Even if we get a 0.25 basis point cut, they're still going to be sufficiently restrictive to continue to bring down inflation towards a 2% target in the fullness of time. All right, what the comments say. Architect Steve says that beard style would suit a vacation to Paris, my brother. That's what I'm saying, bro. That's what I'm saying. It's gangster. It's really, really gangster. I saw someone say Pablo in the comments. That's the aesthetic I was going for, guys. I was going for the Wesley Snipes, the Pablo, and I think I hit it on the nail. All right. So for this current meeting, guys, and as far as FOMC is concerned tomorrow, I don't think expect an interest rate cut. I think what we need to really be looking at is the statement that he's going to make at the press conference, guys. We need to look for hints that a cut at the following meeting in September is fully priced in. And if it is priced in, then we start moving the conversation towards how many cuts can we expect for the rest of the year, all right? Now, in other central bank speak, though, we've got the BOJ, Bank of Japan, also meeting on Wednesday, and markets are pricing in with a 70% likelihood that the Bank of Japan will increase rates by 10 basis points or 0.10%, with some chance that it could be more than 10 basis points, all the way up to 15 basis points. On the British side of things, though, investors are less sure of where the BOE will be and whether they will be cutting interest rates like expected on Thursday, right? Markets are showing a 51% probability that we could find a interest rate cut from the BOE, which will affect the pound, all right? Now, if we do get that cut from the BOE after the Fed, I think that the movement in the pound, in as far as its relation to the dollar is concerned, GBP/USD, the movement on that will be driven by the divergence in the interest rate differential, all right? The fact that holding a dollar will give you more interest in ROI than holding a pound is now going to be the main trade. How can I put it? It's going to be the attractiveness of the trade, all right? And I think it's going to be bearish for the pound and bullish for the dollar in the short term, because in the long term, we're dealing with monetary policy and the fact that we're expecting interest rates to come down in September and pricing in 2 to 3 interest rate cuts, all right? Now, and as far as the economic calendar is concerned, boys and girls, we've got the Consumer Confidence Index at 4 o'clock. We're expecting a contraction, all right? So a slowdown in the confidence that consumers have and as far as their spending habits are concerned, all right? The previous figure was 100.4. We're expecting 99.7, all right? So that would indicate a decrease, nothing much in the way of things. But besides that, we've also got JOLTS job openings today, and that is a leading indicator in what we could potentially see on Friday and as far as non-farm payroll is concerned, all right? That's what we have in as far as today's docket is concerned. Now, the floor is all yours. Tando Mats, I promised you could come on today. It's your turn to request, my friend. All right, let me read the comments in the meantime. Sasa Misto says, so FOMC, are we buying or selling gold? It depends on the clues that Jerome Powell gives us. If he affirms that an interest rate cut in September is fully priced in, then I think markets will rally and risk assets will be more exuberant to the detriment of the US dollar. All right, so it would be a buy if we get the confidence that we're looking for from Jerome Powell. Wiseman Solo also says, I hear the rate cuts, but I never noticed the beard cut. I see what you did there, bro. I see what you did there. All right, let's continue. Rate cut equals beard cut. Come on, guys. Come on, guys. I took off 50 basis points, I think, or 75. I think 75 basis points, yeah. All right, Thunderman says, what happens if you get a lower NFP this month? What will the market do? All right, how will that impact the market? Well, it goes back to what the Fed wants to see, all right? To bring down inflation, we need slower consumer spending. What creates slower consumer spending? High interest rates. We're in an environment of high interest rates, and that ultimately leads to job losses. So we want to see that, all right? We need to break the economy to fix it. So if we get a lower NFP figure, bullish on risk assets, guys. It's about to what extent it's lower. If it's lower, showing that employment is slowing down, then it's bullish. But if it's so low that it's causing concerns about the labor market, then I think in any event it's bullish, because if it's so low that it's causing concerns about the labor market, then the Fed is even pressed to cut the interest rates even faster and to a larger extent to re-amplify the consumer spending, to resuscitate the economy so that we don't have an unemployment recession, all right, which is what they're trying to avoid. That is what the criteria for a soft landing is. We need to bring down inflation without wrecking the labor market. And right now, that's where we are. But if we get an NFP figure that suggests that the labor market is in panic or is shedding too many jobs and at a fast pace, then I think it will be, it'll force the Fed into a corner, and they might just have to cut interest rates to a larger extent than they would have planned initially, all right? Right, let's see. All right. Are you my G? I cannot hear you. How's your volume on your side? I think you're having some issues with the audio. Can't hear you, bro. Tando, cannot hear a word you're saying, bro. I think maybe try to hang up and join again. Let's do that. Hang up and then join me again. appears Tando has some audio issues. So let's wait for him to join again. Shout out to Marcel. Says DXY closing above the true year open, pushing it up as a confirmation. Shout outs for that one. Yeah. Wise Man says the Katarara cartel. You guys are wilding. You guys are wilding. You better get used to it because it's going to stay for a while. It's going to stay for a while. All right. So, let's try Tando again. Tando, can you please request again, bro? Blunt Shubes. What are you saying? What are you saying? I'm seeing all the emojis. What are you saying? And also, who's behind that account? That I'm curious about. Queen Carolina, shout out to you, saying proper dollar analysis as always. Thank you. It's finishing. Die. Check. Buddy.
Yo, Mister, can you
There we go.
hear me now?
I can hear you.
Can you hear me?
Loud and clear, friend. Talk to me. What have you got for us this week?
So, like as I was saying, according to my side, I'm seeing a bullish on risk assets. Then I'm seeing a dovish on the dollar.
All right.
The reason why I'm saying that, do you remember when? Do you remember? I think before NFP. Do you remember the speech that Jerome Powell made regarding about interest rates? He said that now they are uncertain with interest rates, and if there is uncertainty on interest rates, even like the Federal Reserve Open Market Committee team isn't still undecided just to keep interest rates higher or keep them lower. And we've seen a pullback on the dollar because you even once said good news for the economy is bad news for the Fed.
Yes.
Then on another thing, you said that in yesterday, if we're just going to get a lower NFP print, it means that we can expect at least maybe 3 rate cuts of the year because in inflation 7%, then we've moved down to 5.5%.
100%.
If the Fed is keep on restrictive inflation, no, but like in terms of like restrictive, it doesn't mean that they just want to like decline inflation to a point whereby they are tired from hiking up. They are just like making a pullback of inflation from hiking above normal level until we get that unwind of 2%.
100%.
Because like even the Fed is still anticipating just to get their 2% quarterly yields.
Tell me, I want to ask your opinion. Do you think that 2% inflation is achievable in a post-pandemic reality and in a post-pandemic economy? Because that's the question right now, whether it is achievable or whether the Fed should compromise for something slightly above 2% so that they don't wreck the labor market. What's your opinion on that?
I think the Fed can compromise.
You think they're going to compromise?
Yeah, I think they're going to compromise.
Yeah, because I mean, it's going to be getting inflation down from that 7% that we were in the peak. Look at the PCE chart. The peak was around 7.2%. Now we're at 2.5%, all right? Getting from 7 to 2 is easier than getting from 2.5 to 2%.
2%. It's highly easy.
It's a different ball game. So I think the path ahead is going to be determined. I think we can answer that. A simple answer, NFP will determine whether we settle for above 2% or whether we make it all the way down to 2. If the labor market doesn't break, if the labor market continues to lose jobs but doesn't break and inflation continues to come down, then I think they will settle for 2%. But if we find a very concerning NFP figure, then I think that they will have to make a compromise and settle for something above 2% and term that as the soft landing. That's what I think.
Okay, so like NFP, it is a puzzle that we need so we can just determine the inflation, whether it's just going to hike on above normal level or they're just going to keep on declining.
That's what I think. I think that the jobs numbers determine how long interest rates will be held this high. Because remember, higher for longer will break the labor market eventually. Eventually, we're going to start. I mean, think about it this way. Higher interest rates mean lower consumer spending, lower retail sales. Businesses make less profit. They will start by first stopping to hire workers, and then eventually they'll start letting go of workers. All right. So we're here now. All right. The next part after here is recession. Okay. So to avoid recession, you have to cut interest rates. So I think that right now, where we're at is we're still good. I think that the labor market is still very healthy. But if we get a figure below 150 on NFP, then it starts to become a crisis.
Then we can see prices to decline because, like, I've recorded everything into this data.
I see. Damn, bro, you're doing the homework for real.
Yeah.
Shout out to you, bro. Shout out to you. Shout out to you. Shout out to you. I appreciate that, man. That's dope. All right, my friend. As always, thank you for coming through. Thank you for the great contribution, bro. Number one. All right, guys. And there we have it. We got one of our favorite contributors. That's Tando Mats, guys. He's been watching for about 2 to 3 months now. Every single day, the man is making notes. We got him. We got Burberry. We got Malux. We got Benji. I got a whole lot of favorites. Now we got Queen Carolina as well. We got the girls as well coming through. So add your name to the list. Join every day. And then you'll have an opportunity to come down. Not come down, but to join me on the other side of the screen and to give us your contribution in as far as what you think that markets could do for that particular trading day, guys. And yeah, we've kind of reached the end of our conclusion, guys. Kurt Knapp says, what's the schedule? I just pick and choose who gets to come on based on who's joining, guys. I reward people who are always here. All right. Blunt Hubes, who are you? It's giving Catfish account. That one's giving fake account. It's giving fake account. I'm gonna check out that account. What's the NFP target? Well, expectations are sitting at 170, around the 170 mark. That's Prince. All right. Let's see. Let's keep going. Let's keep going. Masal Human says, Peaky Blinders. That's what I'm saying, man. Is that Thomas Shelby swag? All right, guys. Let me know what you think of Tando Mats's comments, guys. That's actually, I agree 100% with everything he said. I don't know what you guys feel about it, but let me know what your conclusion is based on that conversation that we just had, based on everything we just discussed today. And then, yeah, we can call it a day after that. All right. Yeah, says bullish all assets. No. No. Right now, the dollar is bullish because of the geopolitical risk. Number one, we got an heightened geopolitical risk since that have developed over the weekend because of that rocket that exploded in Israel from claimed to be Hezbollah. All right, so we've got Middle East tensions. We've got the risk off sentiment because we've got high impact news. We've also got the FOMC statement coming up. So it's risk off as it stands. Ankle Dollar says, beard cut, mustache policy. We're not doing monetary policy. It's the stash level. Kurt Knapp said, appreciate it. This is everlasting joy of insight. That's what I'm saying, guys. That's what we're here for. I feel like I'm not here trying to give you all the answers. No, that's not my role here. My role here is to guide the conversation. All right. You guys are supposed to contribute in as far as what your 2 cents are, and then we break it down. All right. Help me to help you so we can help each other. Yeah, that's what I'm trying to say. Help me to help you so we can help each other. My role here is just to facilitate the conversation and to guide it in the correct direction. But I enjoy contributions like that, particularly from Tando Mats and other people that always come through with other insights that I would have otherwise not had. All right. All right, let's go. Ankle Dollar says time is money and the daily pass is that time. Yes, sir. All right. You can call me Melu says interesting. All right. But some cases, risk off, meaning all risk assets are bullish. No, risk off means the dollar is bullish and risk assets are bearish. All right. Wise man says, Moses of the fundamentals, lead us, sir. All right. Tato says, how are the geopolitics benefiting the dollar? So in times of economic, and not economic, but geopolitical instability and war, safe haven currencies gather demand. All right. Because people have an appetite to take on less risk because there are too many uncertainties. All right. They flee to safer assets that can still generate an ROI, a decent one, but riskier assets start to become less attractive in an environment where you don't have all the answers. All right. And I think if you look at human psychology, it follows and makes sense. All right. We become more risk averse when we don't have the answers. Israel Nadu says, how's it, bro? Are you posting the lives? No, I am not, because I don't want to spam the timeline, all right? I think that there's more important information, in my view, that needs to be there, and I don't want to fill up the timeline like it's my company. Okay, it's not my company. At the end of the day, I'm just an employee at Alpha Markets, and yeah, I just take my segment and I do my thing, all right? Bearberry, shout out to that comment, all right? And I agree with what Bearberry's saying, right, guys? So even though we are risk off right now, but here is the nuance. When markets are risk off, it's giving you an opportunity to be risk on, all right? It is the catalyst to the rotation, all right? Before markets rotate, they need to go down first, all right? Call it a reversal pattern, call it a pullback, whatever it is, but the technicals are pointing towards the fact that we are going to pivot towards risk on again. And that's because of the way the fundamentals are lined out. Fundamentally speaking, slow economic growth, weaker economic expansion, slower rate of employment, declining inflation, interest rates are set to be cut. It's all pointing down for the dollar, guys. It's all pointing down for the dollar. All right. Mr. Musako says, with that being said about safe havens, I saw gold selling last week, but investors are choosing CHF and JPY as per safe havens. Why would that be? Man, there's a plethora of reasons, all right? And as far as JPY is concerned, traders could be choosing to be bullish on JPY because of the fact that we've got an interest rate hike expected, all right, which will make the yen more attractive this week. That's on Wednesday, right? So that could be a reason why there's inflows to yen. CHF, I'm not too abreast of news for that currency pair. However, it is linked to gold, so I think it's just a temporary counter trend move before the benefits of that safe haven properties is really kicked in. All right, I still think that we're bullish on all of the things that you just mentioned right there, and as far as the fundamentals are concerned. All right, Sean FX, shout out to you, Maji. Tiso says, Mr. Waisi, looking at DXY, it's broken above the 105.55 handle to the upside and created an M pattern. Does that mean it's a fake out and we might get a pullback to the 104.35 and rally down? Absolutely, bro. It's crazy how I know the chart so well in my head that I just painted technically what you described in that sentence, all right? We have got a fake out. That's exactly what you're pointing towards, all right? Now, what we need to determine is whether, no, you need to determine the right entry criteria for that particular pattern, right? Because it could just be exactly what you said, or it could be a breakout to the upside. You need to determine the entry criteria associated with your trading strategy that'll validate that sell, that it's valid and that it's ready to come down. But that's my view as well. I think it's just a pullback to come down ultimately, liquidating some of those early sellers, all right, at that level that has been a resistance for about 2 weeks now, maybe a week and a half. Right now we've broken above it. It's going to generate some buying interest. Stops below the low. Niggas are going to want to buy and get slimed out. All right. The sellers have already been liquidated as well. So it's a beautiful cocktail of confusion for the amateur trader to blow his account. But y'all know better because you're on the daily pulse, right? That's what I'm saying. That's what I'm saying. All right, guys. I think that's it. With your permission, may I leave? All right. I think we're done for the day, guys. If you guys are good and sorted, then I think you can release me. I'll just wait for you guys to let me know whether it's okay for me to dip. All right, but great session, superb session. We got wise man saying Forex is delicious and sweet once you have the knowledge. And I agree. Once you understand what you're doing, things become a bit more enjoyable. You stop panicking, you stop being in fight or flight mode, and you just start moving with the market and you start flowing with it as you should, because you can't fight it. Even if you wanted to, you wouldn't win. All right. Shout out to Real Universal, Wiz Prince, Paul Winkle. See, shout out to you guys. Israel Naidu. I'll see you guys tomorrow. All right. Thank you for always joining. You guys make the stream what it is. All right. Because if you weren't here, I'd just be speaking to myself. All right. I don't mind doing that, but this is far more enjoyable. Okay. Tiso says, so in a nutshell, the trade for the week is already priced in. I think so. I really think so. I mean, monetary policy, unless we get surprises from Jerome